Italy's 2.4 trillion in debt to create Eurozone contagion and new global debt crisis. All this and more in today's market update. Hi everybody, we decided to do a video update on one of the more important financial issues and challenges facing the markets today, and we believe one of the most undercovered issues and risks, which is the Italian debt mountain of 2.4 trillion euros. So the bottom line on this is important to understand what's going on. Italy has a huge debt burden. That's just the government debt, 2.4 trillion. A trillion is 12 zeros. That's 1,000 billion. So it's a lot of debt, and more importantly, you have to look at it in the context of what is the Italian GDP, and the Italian GDP is 1.85 trillion euros. So it's over 130% of GDP. Most economists tend to get quite nervous about economies and the fiscal situation in countries when the debt to GDP ratio goes over 100%. So it's over 130%. It has been for a number of years, and it's completely unsustainable. And now we have a situation whereby Italy it's dysfunctional at the best of times politically, very unstable politically for the last 100 years. And now we have two quite radical parties from both the left wing and the right wing in government, in a coalition in Italy, La Liga, the League, and the Five Star Movement. And these parties are very much very strong nationalist parties who are very much about putting what they believe is the Italian national interest first and foremost over the interests of the European Union and the ECB. So this creates the very real risk of contagion, and we believe that is quite a likely scenario in the coming months and years. And the risk is the debt that Italy owes. The debt that Italy owes to other EU nations alone is 25% of GDP, so nearly 500 billion to other EU nations alone. So this is the the debt domino that creates this real risk of contagion. So while most of the focus of the media in recent weeks and months is on the risk of trade wars, I think the risk posed by a debt crisis in Italy is very underestimated, and it tends to not get covered that much. It gets covered in the specialist financial media and business media occasionally, but it doesn't really get into the mainstream media, and there's almost a narrative that we are in recovery and that this risk is gone, and unfortunately that is far from the case. And we believe that the Italian debt crisis will come back with a vengeance in the coming weeks and months. Just looking at the Italian 10-year bond alone, I think it's a very important benchmark and indicator to keep an eye on. It's gone up from, in this year, just in the last 2 or 3 months alone, it's gone up from the Italian 10-year 1.7% yield, and today it's, last time I looked, I think it was up over 3%. So it went above 3%, as high as nearly 3.2%, and today it's trading at 2.68%. So given the scale of the debt, when those yields increase, the repayments become much bigger. And obviously the Italian debt has been artificially supported by the ECB and the Italian Goldman Sachs central banker Mario Draghi, who has been in there using his bazooka to print euros in order to support the European bond market, indeed the Italian bond market. And we all know that this is completely unsustainable, and that which is unsustainable will not be sustained. So I think the real risk is that the global uncertainty, already there are huge signs that the Italian economy has been slowing down. We have the political uncertainty both in Italy itself and internationally. Trade wars are a real risk to Italy, and basically people are not joining the dots here and not realizing the ramification of this, and basically the sheer scale of Italy's debt. Basically, it poses a threat to global GDP, and there are some estimates from some economists that it could wipe as much as 0.4% of global GDP. So, and this is just Italy. I mean, the problems of the Eurozone are still very much there in terms of Spain, Portugal, Ireland, Greece. None of this has been resolved, and these are real risks. And the bottom line is this default in Italy could create contagion in the Eurozone, and that ultimately may lead to a currency crisis in Europe. And we think it's a very real risk and something to be conscious of, and to just prepare and just diversify, and do not have all your eggs in particularly for European investors, don't have all your eggs in that euro basket in terms of your euro denominated assets. So to conclude, Italy's monumental 2.4 trillion euros in debt is a very real risk to both the Italian economy and indeed the European economy and the wider global economy. Italy it's too big to bail, and it's too big to fail. And if they default, it has very real ramifications for both investors in the Eurozone and investors internationally. It is akin to a Lehman Brothers style shock, except obviously it's a sovereign nation rather than a bank. But in terms of the contagion and the impact on all the other European nations and all the other debtors and people who have lent money to Italy, it could have a similar impact to Lehman Brothers and create this new global debt crisis, global financial crisis. So it's a real risk, but don't panic. Carry on with your lives. Just diversify. It's very, very simple. Don't have all your eggs in one basket. 3 words: diversify, diversify, diversify. So, yeah, we covered this in our market update this week. It's something we'll continue to keep an eye on. We think it's very, very important. So please subscribe on the YouTube channel. Subscribe to our updates on GoldCore.com. We're on all the usual social media channels on Facebook, Twitter, LinkedIn. Interact with us. Ask any questions. If you have any questions about this topic in particular, any other topics, please feel free to contact us. Email us at info@GoldCore.com. Thanks for your time. Take care, and bye-bye.